Good morning. It's Monday, May 20th, about 6 a.m. Central Time. Overnight, the precious metals are higher after Friday's explosion. Many of you are long industrial and precious metals, and congratulations to those of you who are. Now, overnight, gold and copper both hit record highs. Gold was on the CME contract, copper was on the LME contract, and investors continue to pile in on those markets. We're seeing the offers being lifted, we're seeing the offers being canceled, and we're seeing the bids all come together, raising that as the tide raises, the boat raises with it. So copper continues to focus on lingering supply deficits, while gold continues to perform its best in a stagflationary environment. It's not a rising inflationary environment where gold performs its best, because in a rising inflationary environment, the Fed is quite hawkish, the Fed is raising rates. It's crude oil, it's gasoline, it's real estate. Now, I'm not talking about real estate stocks, I'm talking about your house. Think about many of you, your house has appreciated significantly in value, especially in the from 2020's bottom to the recent highs here in the real estate market. As those interest rates rise with it here, that's to fight the inflationary environment. It's where the Fed is unable to raise rates and growth declines and inflation remains elevated, is where gold back-tested performs as one of the best asset classes. Stagflation, declining growth, rising inflation, and the Fed completely handcuffed. Now, what about silver? Silver traded limit up 8% on the Shanghai exchange on the Sunday night train, and since then it has given up some of its gains. For those of you who are working with blue line futures, we continue to raise stops, practice disciplined risk management, and look for calculated risk opportunities in many of these precious metals markets and other commodities that are out there. For those of you not working with us directly, ask yourselves why not. So looking at this silver market, many of you are calling me up going, hey, is there room to run on this thing? So looking at the last time we were at these levels, February 14, 2011, we were at $32 an ounce. It took 10 weeks before silver had peaked out. At April 25th, 2011, we peaked at about $50. I remember it was a Sunday night trade. We went significantly higher, and then by Monday coming around, we liquidated. It was the day that they actually took out Bin Laden. So Zero Dark 30's been playing a lot in my mind right now because of the fact that that movie coordinates with that, but that's a whole nother topic of conversation. So the last 4 weeks that silver was rallying, that last month in April, we saw $5 ranges. Now we're seeing $5 ranges already in the silver market, but realistically, keep an eye on those average true ranges and things like that for practicing risk management strategies. You're going to want to continue to raise the stops. And if you are in some of the closer months like June gold and July silver, you're not going to have a whole lot of time on that. So we could continue to push this bull market higher. But again, like I said, practicing risk management goes along the way with it. Now, looking at the S&P 500, your pivot point is going to be 52.75. I think that that's kind of the bull bear line here this week. If we see a push down to that 52.75, we could bounce back up to about 53.30, 53.35. A break below 52.70 really could create a larger washout down to about 52.10. One thing I do want to note is that I haven't heard a peep about people saying silver was manipulated. So when it goes in your right direction, it's not manipulated, but when it goes down, it's manipulation. So once we peak out, I'm going to hear all the manipulators come out of the woodwork saying that silver's being sold off because the manipulators are back. So I don't even know what that means. So one thing to note is that, like I said, I think that the few most important things when it comes to silver is monitoring copper production out of mining operations, right? Because 73% of all silver comes from copper mining production and copper miners, and only 27% of any mines out there mine specifically for silver. So you really want to keep an eye on copper mining, and copper mining has faced significant supply shortages, demand has increased, and also increased regulation has made it harder for these copper miners to get the product out of the ground and into some kind of position where it goes to an end user and it is created in different products and things like that. The economic environment, as far as the EV demand, the green energy, blah, 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 is all helping push copper demand higher. And that's really straining the supplies out there. The second thing you want to look at is China. China is the largest consumer of copper, one of the largest consumers of silver. They take that and it ends up in all your little gadgets and things like that. Chinese economic data here, although mixed, the consumer is strained, the industrial production aspect of it is where things remain most focused and most is increasing, and that's where sensitivity in the prices. So you do not want to see Chinese economic data from an industrial standpoint turn down at all, or their inflationary environment turn down significantly, because of the fact that we could see a peak in that copper demand, and it would also justify a potential peak in prices. So looking at some key levels here on the June gold contract here, I still think it's about 23.20, but there's many lines in a sand above that. Now you look and see that we're at 24.39. I think that 23.95 is where someone would aggressively have their stop loss in place if they were on that front month June contract, in order to look at longer opportunities in August, October, and December. And then you get into the silver market. Silver, kind of your critical level support. I mean, I think it's $30 is kind of now the new line in the sand, but trading at $32, I think you would have to have those stop losses a bit higher up. So come up with some calculated risk. Think about how much would you give back and still be comfortable with the trade, or think about having some kind of where you're protecting a particular portion of those of the trade, of the open trade equity that you have. You got any questions? Give me a call directly, 312-858-7303. Remember, futures option trading does involve risk loss, may not be suitable to all investors. Good luck. Good